Have you been wondering what's going on with the Huntsville real estate market? Well, here is your update from May 2021. Hi guys, my name is Brandon Taylor with Capstone Realty. Each month I try to bring you an update on what is happening in the real estate market. I've been a couple of months behind, so this month we're looking at the last 3 months, so February, March, and April's numbers. I'll give you a little spoiler alert. It's been pretty much the same thing that's been going on for about the last year or so. And that means we're in a very strong seller's market. It's increasing, and it's tough out there for buyers. Stick around to the end and I'll give you some pointers for buyers, sellers, and investors and what they can be looking for or expecting in this market. So I say this every month, and when we examine a market, we want to look at the supply and demand and what factors might be impacting those, including interest rates. Sometimes we look at employment numbers and all kinds of things like that. So right now, let's start by looking at supply. Looking at this chart, we're looking at the trend over the past 5 years on supply. It doesn't take a rocket scientist to figure out that it's been decreasing. The last 3 months, we've ended with 572, 501, and 496 homes for sale at the end of those months. As you can see, the trend has been steadily decreasing, and it did flatten out the last 2 months in a row, so we'll see if that's a trend or just 2 data points. This is the lowest point that we've had inventory in the last 20 years of data that I have, and so inventory is very low. It's 53% less than last year, last April. I will point out that last April was a weird month just because of COVID just being announced, and so there was a lot of just things not happening in the real estate market. That could be why it was 53%. But still, 53% is a big change. When we look at inventory like this, we're just talking about what is currently available. It doesn't mean how much has come and gone. It's just how much is sitting there at one moment in time. Looking at new listings is another interesting thing because it tells us how many people are listing new properties in a given month. That's what this chart is showing. We're looking at the last 5 years of new listing data. February through April, we had 729, 851, and 933 new listings. That April number is the highest number we've had in the last 5 years and the highest I could find going farther back than that. The March-April relationship is kind of interesting because if you look at the last 4 years, March has been higher or basically equal to April. So seeing a big jump like this from March to April, so it jumped 82, which is like 9%, 8%, something like that. It's a pretty big jump month to month. And so that's something to look at. I don't know exactly what to make of that jump, but it does seem like prognosticators said there was going to be a spring surge of listings as people saw that prices had gone up and started getting ready to be out of school for the summer and those sort of things. And it seems like this year's spring surge has started up maybe even faster than past years. The next chart is a rolling 12-month sum of the new listings. So this says in the past 12 months, each data point, how many new listings have come up. And so what I find interesting is that we're at a very high point over the last 5 years for new listings. So despite the limited inventory, we are getting more options for buyers. They're just, as we'll talk about in a minute, they're just going quickly. So we are getting a lot of new inventory. It just isn't staying on the market very long. So this should be encouraging for buyers. As you can see when we look at the chart, it's been going up for the last couple of years, really since 2018 was the low point that we see here. And so almost 3 years of continuing increase in the 12-month sum of new listings, which should be encouraging for buyers as it seems like there's tight inventory, but we are getting lots of new inventory really every day. But the year-over-year increase is 4.5% of this 12 months versus last 12 months. And that's how many new homes we've had listed. The next thing I wanted to break down is showing the new listings by construction type. So I think this year there's going to be a lot of new construction sold just because of the tight inventory that's sitting out there available. And so as you can see, this is showing in the supply metrics. There's been a growth in inventory, but almost all of that new listing growth is equal to the growth in new construction, not in the growth of existing homes, which has been pretty steady. The last 12 months for builders has been really challenging. They've had supply problems, they've had lumber price increases, they've had labor shortages, all those things is what the local builders have been dealing with. But despite all that, they have had 14.5% increase in new construction listings. So they've overcome a lot to get there, and that has been the bulk of the new listings that we've seen. All right, so that's all we can look at really for supply side. Demand side is a little bit trickier because you can't measure demand directly. You can only look at some proxies for it, but we've got some good ones, so here we go. All right, so looking at demand. First thing we look at for demand is the number of closed sales. So February, March, and April. February was the low point for the year, which is pretty typical. One thing about looking at closed sales is there's definitely a big lag between when someone buys a home and when they close on it. 30 to 60 days is pretty typical, but some are longer. And so the fact that February is the low point when generally December, January is the least number of listings and considered the slower time of year is just a reflection of that lag. So in March, we're really looking at January, February sales. April, we're looking at February, March sales. And so when we look at May's number, we'll start seeing really that spring number where we saw all those listings increase. We'll start seeing that in May and June's number. But we did see an increase from the low in February up to March and April's number, which were very similar to each other at around 700. This is an increase from last year, but last year we were dealing with the COVID situation. And so March wasn't really impacted that much because it was just starting, but April was definitely impacted by that. This year's April number is almost the same as what it was in 2019 in April. And so it's been kind of flat for closings, which is interesting considering how many more listings we've seen. So I do expect this number to increase in May, June, July, even through August, that we'll see this number be higher even than what we had last year and the year before. Next chart we're looking at is the number of closings in the past 12 months chart. This is 5 years worth of that. And so you can see that there's been a steady increase in the number of closings, and this just shows that we are continuing to have a very active market despite our supply problems that we just talked about. Pending sales are another good measure for how demand looks, if demand's good or not. And so this is a pending chart that shows, once again, 5 years worth of data. We can see that there's increasing demand as there have been more pending sales each of the last 3 months than the month before. We're looking at pending sales data. February, we did see a dip from January, which is a little it seems like it's just an anomaly in the data. But then we saw an increase in February, we saw an increase from February to March, and then March to April, which is pretty typical for this time of year. I expect that to continue through the summer. The year-over-year trend is interesting. It was down a little bit in February, but then it was up some in March and up a lot in April. I think that probably has to do with last year's April being a little bit weird, where there was a little blip from March to April. And so that's why there was such a big increase from year-over-year for April. But I do think if we see the number of listings that I'm expecting, maybe around 900 or so, then we'll see something like 800 or 850 pendings in May. Really not just May, but that's kind of through the summer what I expect. I expect to see that level almost each month. Another thing that impacts demand significantly are interest rates. So looking at this is the Freddie Mac Primary Mortgage Survey. It's done every week for since 1971, I think, 1970, something like that. And so you can see that interest rates had ticked up a little bit. You saw that they started to tick up back in, I don't know, maybe February. Yeah, middle of February, I think they started to tick up. And then they came down throughout March and April and came back below 3% throughout May. And so we're seeing an average rate below 3% again. So they're very good. And that interest rate is going to be continue strong demand as people have very, very good buying power or how much they can get for their monthly payment. And so that encourages buyers to get out there and buy houses. All right, another good demand metrics is the day on market. We have had a very flat days on market because it's basically been as low as it can get. We've been in the 3 to 4 range for the past year essentially, and we finally dropped into 2 days on the market in April. So the average house that sold was only on the market 2 days, which is pretty crazy. I will say that almost every new construction house that shows up there is 0 days on the market, except for the model home, which sometimes will have 1,000 days on the market, which is always kind of crazy. But as long as this number stays as low as it is, and we're looking at, as long as this number stays as low as it is, we're not going to see the number of houses on the market go up. We're going to have to see an increase in days on market in order to actually get some inventory. So we need a bunch of listings in order to get there. The next one, this is my favorite metric really to look at. It gives you a good snapshot of the balance between supply and demand. And this is called inventory, months of inventory is somehow it's called, or absorption rate. It's basically how many months would we have to sell at the rate we did last month in order to run out of homes. They're sitting at 0.6 months of inventory. And so we need in order to be at a balanced market where it's equal negotiating power for buyers and sellers, we need about 5 to 6 months of inventory. And that's really when you start seeing price increases flatten out. or slowdown is around 5 or 6 months of inventory. So we would need 10 times as many houses on the market as we have right now in order to reach that point. So unless someone's hiding 4,000 houses out there, we're tight. The next thing we look at is the median sales price. I always like median because it throws out some of those really high-priced houses. It doesn't throw them out; they're still included. It just though one $3 million house or $5 million house can really throw off an average, but it still is just one data point to the right of the median. So I like that. So I'm using median, and I showed this chart as looking at it with new construction, previously owned, and all. So first we'll talk about all construction, and we hit $280,000 for the median sales price in April. And that's a big increase of 16.67%. So last year, the median price was $240,000, and now we're up to $280,000. So a $40,000 increase in the median house. And it's hard to know for sure, but it doesn't seem to me like the median house is that much nicer. I think a median house sold in April of 2020 and a median house sold in April of 2021 are pretty similar properties. I did think it was interesting looking at the compression of new construction prices to existing construction prices, as those used to be significantly separate, and now those lines have gotten much closer together. I think this has to do with the lack of available inventory, and so new construction hasn't really taken advantage of that and jacked up their prices that much, but the existing home prices have definitely gone up significantly. So in the last year, the new home price has gone up 11.2%, and the existing home price has gone up 23.8%. So there's been a much bigger increase in the existing home value in the last year. I don't know exactly why the new construction hasn't gone up more. I kind of have a theory in my head that maybe people are foregoing some of the upgrades on their new construction houses because of the increased base prices from the builders. And then I also think maybe there's a lot of spec homes being built right now, so maybe builders aren't building as expensive homes as some of the pre-sale folks were doing before. That maybe have to do with availability of materials and stuff like that. Those are just guesses. I don't actually know for sure. I also think that there's been some big increase in labor prices, and the last few months I've seen increases in new construction prices when working with buyers. And so I think that some of those just haven't worked their way through yet, where we're still seeing, things are that went under contract in November are closing now, and so for pre-sales, and so we may see that new construction price tick up. It just may be a little bit of a lag in that, as it takes a while for that to work its way through the system. All right, so now is the so what portion of the show. So start off for buyers. So buyers is a very strong seller's market, so that means that we need to go in ready to go fight for a house. Like, there is not a dip your toe in the water kind of deal right now for buyers. Multiple offers and very competitive situations is what you should expect. So I've been saying it for the last couple of months, and I still say it, that you need to be patient and aggressive. You got to go in knowing that, hey, the house that you want probably isn't sitting there waiting for you. And when you see the house you want, you need to aggressively go after it and go in trying to win it. Based on the trends right now, it doesn't show any signs of slowing down. So I think waiting just means you will pay more for the same house later. And so that's a choice you can make, of course, if you're not interested in dealing with this market. But if you want a house in the near future, now it seems like a better time than later. One thing for buyers, I think a year ago it was, hey, if you don't want to participate in this market, you can go build. And so I still think a lot of people are going to build houses this year, but a lot of the builders have changed their rules in the past couple of months. And so they've instituted things like they have a limit to how many they could sell each month. Some builders are only doing spec homes. And so that means they pick out all the finishes, all the features, and the floor plans, and then they just sell them like they would a regular house. And so the plus for you as a buyer means you don't have to wait 9 months. You may only wait 60 days or something like that because it's almost done when you buy it. But the downside is you don't get to choose your own finishes. So that's the plus and the minus. But a lot of them are doing that. Some are putting escalation clauses in new construction contracts. And so you need to be ready for that and understand what that means. And so that means based on the materials cost difference from the day that they close, we sign the contract until the day that they actually make the purchases, that they can adjust your price upwards. And some are doing 3 to 5%. It just varies builder to builder and even neighborhood to neighborhood. And so talk to me about specific neighborhoods you might be interested in, or we can go look at those. But there have been a lot of rule changes. So it's not really one of those where you just go to a model home and go buy a house right now. And so it's a little bit different than that. And so So that's worth knowing about. For sellers, it's a fantastic market to sell a house. You've never been closer to having the equity be cash in your pocket than you do right now as a seller. Most houses have multiple offers in a very quick time. And so the advantage of that is that it can be, it's a lot of fun to get a lot more than maybe you even thought your house was worth. But it is a stressful situation to deal with. There's a lot of pressure, a lot of negotiation, a lot of strategy involved in making sure you get top dollar for your house and comparing those offers to each other. So I'd love to help you out with that. And finally, investors. This is a tough market for investors looking to buy. And so for those of you who aren't just on the sidelines, if you have money that you want to spend, I do think looking for things that require repairs is probably still the best way to do it. Repairs do scare away a lot of your retail buyers, and so it gives you a little bit less competition. But it's tough out there. There's a lot of investors because there's just a lot of money in the system right now. But I do think Huntsville still is an attractive market for investors. We're still seeing a lot of out-of-town investors interested in our market because of the fundamentals that are causing it to grow. And how we weathered the last recession has a lot of people thinking of us as kind of a safe haven during those times because of our very solid employer base, strong local economy. All right, so that's all I got this time. Let me know if you have any questions or comments down below, or you can always give me a call or shoot me a text at 256-617-3975. Thanks for tuning in, and let me know how I can help.